Hello YouTubers! Good debt versus bad debt. Debt is one of those debatable subjects, controversial subjects that seems to be in the lives of the majority of people these days. Some view debt as a necessary tool to be used, and others view debt as something to be avoided. So which viewpoint is correct? And is there a happy in-between on this huge subject? So stay tuned to the end of this video and I'll provide you with some thoughts and some ideas that you may not have thought of. Hi, this is Bruce Boys again here from Homes and Life. And thank you again to our subscribers and welcome to you new subscribers. Before we go any farther today, I will say that what I'm talking about here today will be my observations and opinions. I'm not a financial or a legal advisor. My intent here is to give you information that may cause you to do your own research and find the answer of what would work best for you in your situation. So in this video, I'll give you a rough idea of debt, as it's a large subject and it can get quite complex in certain situations. And yes, I know not everyone is going to agree with me on this subject here. So let's take a look at debt. What is debt? Well, the definition of debt is an obligation that requires one party, the debtor or borrower, to pay money or other agreed upon value to another party, the creditor or lender. Debt is a deferred payment or a series of payments which make it different from an immediate purchase. The debt may be owned by a state or a country, local government, company, or an individual. Debt is generally subject to contractual terms regarding the amount and the timing of repayments of principal and interest. Loans and credit cards and mortgages are all types of debt. So, is debt good or is debt bad? I will limit my thoughts here to personal debt, as corporate debt is a different animal altogether. Few people these days are able to find a house that they like and they want to live in it and just write out a check and buy it. It would be nice if we could all do that, but such is not the case. In a real estate situation, most people need to go into debt and borrow the funds to purchase the house. And this is as close as I'll come to calling something a good debt. It is a necessary debt, but there are ways to minimize the impact of a mortgage, and I'll go into those later in this video. In some countries, this debt to purchase a house is so large that it cannot be paid off in the original borrower's lifetime. So, the next of kin get to inherit the mortgage. What about vehicle loans? Well, this is what I would call bad debt. As I've mentioned in a previous video, a vehicle is called a depreciating asset. It only goes one way in value, and that way is not up. They only go down in value. So when you sign the finance papers for that new vehicle and drive it off the lot, you've just lost 10 to 20% of the value of the vehicle. Not exactly the best financial investment. Now you can moderate that a little bit by buying a used vehicle, but it would still be best if you did not borrow for it, as it still only goes down in value and you still have to repay that debt regardless of what the vehicle is worth a year later. And then there's another big one. Credit cards are debt. If you have a balance owing on your credit card, you have debt. It is a financial obligation that needs to be repaid. This is a huge industry that makes billions of dollars for the financial institutions because many people do not or cannot pay off the balance owing on their credit cards. and the high interest rates just keep getting added to the amounts owing the balance. And if you pay the minimum payment every month on your credit card and don't spend any more with that card, you still may not live long enough to repay all of that credit card debt. You need to intentionally pay them off. Now here's a thought. Most people have a number of credit cards, so why not look at the smallest balance, the credit card with the smallest balance, and make a concentrated effort to pay off that smallest balance. Then when it's gone and out of the way, focus on the next smallest balance and get it paid off. It may take a while, but your debt load will gradually shrink and you will be in a better financial situation. Personal loans can also have a large impact on our lives. Maybe it's student loans, and there's billions of dollars of student loans out there. Or maybe it's just a loan from Great Aunt Helen, but it is still a financial obligation that needs to be repaid. Maybe the terms are flexible and maybe the interest is low or non-existent, but it still needs to be paid off. There's always that awareness that's an added pressure in your life. I do kind of wish governments would understand the concept of paying off debt, but that's a different subject. Meanwhile, we need to manage the debt in our lives. I mentioned earlier that I'd give you some additional thoughts on real estate purchases and mortgages. Things may vary a bit in different parts of the world, but in many countries, you're allowed to purchase a house with a minimum down payment, some places 0%, maybe up to 10% of the purchase price. But the bank will only finance a portion of the purchase, and another organization will provide the balance of the funds required and, as well, an insurance in case you default on the mortgage. Guess what? This in turn adds an additional cost that you, the buyer, get to pay. But if you save up longer and put down, say, 20 to 25% of the purchase price, that second party is not needed and you save that additional fee. Here's some other ways of keeping the mortgage at a minimum. One might be driving an older car and save that extra money for the down payment or the mortgage payment. Living either with family or in a reasonably priced rental, and again, take that extra money, save it for the down payment. Or if both spouses are working, take one spouse's income and say, that is going to be for our house, and you save it specifically for that home purchase. And when you negotiate your mortgage, check to see if prepayment is an option or what options they might have in that respect. This way you can pay down the principal or the amount owing, maintain the payment amount, and you'll speed up the repayment of that mortgage. It'll be paid off in a shorter time frame. So as you can see, debt needs to be controlled and paid off as soon as possible to do so. Debt is a tool to be used, but not abused. Sometimes the debt has grown because the income has been reduced, in which case I would suggest that you work on increasing the income side of things. Usually there are options that can create some income, such as online businesses, delivering pizza, cutting grass, and there's many more options as well. If you would like more information on managing your debt, I will provide a link in the description down below to a book that can help you to get on track financially. It's actually a very interesting read. And once again, I hope you've enjoyed this video and that I've gotten your minds thinking about debt and debt management. Please remember to like and to subscribe. There's more videos to come. Remember, life is an adventure, and I'll talk to you again soon.